Hey guys, this is Kyle from InvestiShare. I'm going to be showing you guys the price action that occurred yesterday. We just scooped up 60,975 and got over $500 million worth of liquidity just on Binance's exchange alone when we dipped down to that level. And now we just broke a key level of resistance. We actually had 3 levels of resistance of confluence that broke, and we just entered along off of that confluence, and now we're targeting around, on my screen showing around 64,000, but if we have continuation structure, we can end up holding this trade to as high as 67 all the way up to potentially 70,000 again. And this is going to sound like a really bullish statement, but if we hold above 63,000 for about 4 or 5 more days, I do believe that we might not ever see 60,000 ever again. I know that's a super bullish statement, so I'm going to turn on the green light for that one. And I know a lot of bears, bearish Brian, if you're watching this right now, you're probably be cringing. But yeah, I believe it's possible that we not ever see 60,000 again if we hold above 63K just for 4 or 5 more days. And I'll explain why in the charts, and you guys will see what I'm saying. But let's dive into the charts, and I'll show you what I'm seeing. All right, so this is the 15-minute time frame for Bitcoin, and let me explain why we entered this long position here. So when we were dropping yesterday, we did take a quick short, but I was incredibly cautious during the short. I'm not someone that normally shorts Bitcoin. You can almost consider me a one-dimensional trader, meaning I like to focus on longs. Just more comfortable trading that way. So I'll give about 90% of my signals as a long, especially during the bull market. During the bear market, it's a little different. My brain kind of switches to bear mode, and I mostly focus on shorts, and you'll very rarely see me enter in a long. But anyways, so yesterday's trade, we had a break of this level right here. And we had the continuation, and in confluence with that, we saw rejection off of the 4-hour support level that we're hoping for it to maintain as support, but we actually broke down below it, and we got the lower low confirmation, and we entered in on that while being extremely cautious of the fact that a buy wall appeared right here, like a massive buy wall. And it was basically saying, we're just here to take the liquidity and then we're going to leave. So it was clearly market maker manipulation. And so we were very cautious. And I ended up closing half my trade here. Some people closed the full trade, and rightfully so. Like, good job, guys, for getting completely out. And then I let the rest of it hit my stop loss just in case the VWAP reset acted as a form of resistance. And instead, it acted as a resistance for a little tiny bit, and then it acted as a form of support, and we got us back up to this level again and actually hit my stop loss. So this trade was profitable overall because when I closed half, the gains outweighed the value of my stop loss. So if anyone who's a beginner of a trader, just so you guys are aware, if you end up closing past what's called your 1-to-1 risk reward ratio when you're using your short or stop position tool, if you close past that, and even a little bit more, then if you close half, you're going to end up having your trade break even or make profits depending on where you close your position. So if you are not very confident about something you're seeing in your charts, you should actually take action on what you're seeing and listen to what the chart's telling you. We had a lot of confluence saying, like, we're just here for a liquidity grab from the people that entered an extreme amount of longs during this moment here. And so we made a small amount of profits there. But now we had this act as a form of support from the buy wall that was being built here. And we ended up breaking this key area right here. So when we came up and we had this act as a form of resistance, we had the confluence of this breaking when we had this 15-minute candle close above it. We had the confluence of this downtrending resistance being broken. We had the confluence of acceptance back above this previous level of resistance and support. So a lot of things were screaming enter along. And on top of that, we had a double bottom reversal structure. So we knew that there was liquidity resting up here to be taken. So this was an insanely good trade. As soon as we entered, I gave it a little bit of time before I entered because we had we wanted to see it kind of act as support as well. So I gave it a little bit of time and it allowed me to catch like roughly the bottom of this wick. And now we're up quite a bit on the position, and our target is up here at the previous value area high of this consolidation structure here after we broke this downtrending resistance. And another key part about this level is that it's its technical target of the falling wedge. Now, I know a lot of people have experienced this as a trader, especially the people who are formation traders that don't have a full grasp yet on value areas. Sometimes you'll see formations being built, right? And it's a bullish structure. Like this is a bullish formation. This is showing you that there's a reset going on in oscillators, and we're positioning ourselves for a lack of confidence for the market to go down to a key level of support, which was this level here. And it's basically just telling you that people aren't confident that's going to go down very much lower. And then it breaks to the downside and then goes to the upside, right? Hitting the technical target of the structure. So yeah, that's very, very common, especially when you see a lot of liquidity on the heat maps right below the structure. So you have to watch that in your heat map charts like this here. So what I mean, so this is what we were looking at before. This was the chart. This is how it appeared. But now if I reset this, because I haven't refreshed this page since the last video we did together, and we go back to that weekly chart, there we go. So now we can see that this was the key level here with over $562 million, maybe more. Yeah, a little more than that. Just in that one little price target. And we came up and we scooped up that liquidity and we grabbed a little bit more and then we started pumping. And now we have a new form of liquidity down below it, but there's honestly, that's perfect. So we had that liquidity grab and there's new entries here, but it's not as aggressive as what happened in the past over here. So we can anticipate for us to start hunting for liquidity to the upside and having a target like this hit. Now, if we go back to the 4-hour time frame, this is what I'm looking at for higher targets. So we have double distribution forming. So we have to be cautious about that. And double distribution, for those who don't know, is when a value area starts to form kind of like a B structure like this, right? So if you see a B structure like that, that kind of tells you that there's two key value areas within the structure that you've got drawn. So you got to anticipate high volume within the valley here. But as soon as you hit the fixed range volume profiles wall, the valley wall here, you got to anticipate it acting as a form of resistance, right? So from here to here is a really key level. These are between this, you're gonna have high volume, but as soon as we hit it, we're gonna have a form of resistance, and we can actually ping pong between them and build structure from based on where we are now. And what we want to have is that structure to be, continuation formation and break to the upside, obviously, since we're in the long. But we could also have a reversal structure and bring us back down to the daily momentum, as low as a daily momentum. But as time progresses and we stay above these high levels, we are getting this uptrending level of daily momentum, giving us a higher and higher price after every single day that passes. So this is acting like a guard and kind of evolving the floor to a higher level. And if we stay above around 63K for even just 3 or 4 days, you can see that if you draw like a rectangle pattern here, that you'll be able to find based on that active candle where the floor is during that time. So right now the floor is roughly around 59,600. But as time progresses, that floor increases, and you can use this as a tool to help tell you the max drawdown risk on potential trades that you do. So this is like your last straw. If for some magical reason you're not using a stop loss, then you should use this as your last straw until you get completely out of the position if this starts to act as a form of resistance and doesn't act as support. So let's go back into the lower time frames. So what I want to see with this position is the broad momentum to be maintained as we reach around 63K. If we break the momentum, like while we're here, I'm going to look for any kind of reversal structure like a double top or head and shoulders. And when that support breaks, I'll be getting out of this position. However, if we break this momentum above it, I'm not going to care that we lost momentum, because it's very common for us to lose momentum after breaking key levels of resistance and building structure. And then we can listen to that structure. If it breaks to the downside, we get out. If it breaks to the upside, we get in, and we start drawing new forms of momentum based off of that. So that, my friends, I believe is it. I think I covered everything. So if you guys have any questions about this, you can reach out to me in the Discord, and you have yourself an amazing day and stay profitable. Thank you. Bye.
Hey, yo, I'm all about the crypto. In case you don't know, it's the hedge new invasion, the craziest sweep on the nation. No baby, every blockchain and created the same, but the learning curve feels like a bullet to the brain. Let me enlighten you, let me enlighten you. React to the max and we'll turn to a fire. When you're down on your knees from the USD, we'll see you on the other side.